opening of this morning's program will be the latest updates from the international financial markets. U.S. stocks continued to experience a difficult trading session, with red dominating Wall Street. The decline of major technology stocks and the cautious sentiment of investors were the main factors holding back the market. Ahead of the session, the Dow Jones Industrial Average posted only a negligible gain despite briefly touching record highs, while the S&P 500 and Nasdaq both fell due to losses in large-cap tech stocks. Overall, the market remained cautious, awaiting signals about the Federal Reserve's interest rate outlook. In addition, the U.S. Department of Commerce has added more than 400 imported products to the list subject to a 50% tariff on aluminum and steel, heightening investor concerns about trade volatility. Also, during last night's session, global crude oil prices reversed downward thanks to prospects of reaching a peace agreement for the conflict in Ukraine. At the close of trading in London, Brent oil fell to $65.79 per barrel, down about 1.2%. WTI oil on the New York Mercantile Exchange also dropped nearly 1.7%. Experts noted that positive outcomes from the U.S.-Russia summit in Alaska, as well as the conference between U.S. President Donald Trump, Ukrainian President Zelensky, and European leaders, helped ease concerns about escalating tensions in Ukraine that could disrupt oil supplies. The U.S. housing market showed some signs of recovery in July, although the sector still faces significant challenges from high interest rates and weak consumer sentiment. Data from the U.S. Department of Commerce indicated that single-family housing starts, the largest segment of the market, rose 2.8% last month. Both total housing starts and new building permits exceeded forecasts in July. This data was released as 30-year mortgage rates fell to their lowest level in 10 months, raising expectations that the Federal Reserve may soon cut rates. However, mortgage rates remained elevated compared with pre-pandemic levels, and record-high housing inventories continue to pose challenges. Fast fashion giant Shein is considering relocating its headquarters back to China to facilitate its planned IPO and listing on the Hong Kong Stock Exchange. Currently, Shein's headquarters are in Singapore. According to Bloomberg, the brand is exploring setting up a new parent company in mainland China to gain easier regulatory approval for the Hong Kong listing. Previously, Shein had planned listings in London and New York, but faced major challenges due to tighter listing regulations and heightened U.S.-China trade tensions. Ladies and gentlemen, the Ministry of Finance is finalizing a draft decree on financial mechanisms and performance evaluation for the Vietnam Bank for Social Policies. Notably, it proposes raising the general credit risk provision ratio from the current 0.53% of total outstanding loans to at least 0.75% of total loans. Reports show that by mid-year, the bank's credit risk reserve fund reached over 2,300 billion Vietnam dong, accounting for just 0.53% of total loans. However, the recent impact of Typhoon Yagi pushed risky loans up by nearly 2,400 billion Vietnam dong, exceeding the existing reserve, underscoring the urgent need to adjust provisioning ratios to ensure capital safety for loans to poor households and policy beneficiaries. The bank will therefore be required to set aside and maintain risk provisions at 0.75% of total outstanding loans, strengthening financial capacity, ensuring capital safety, and proactively responding to credit risks amid increasingly unpredictable natural disasters and epidemics. Recently, the Prime Minister issued Directive Number 133, assigning ministries to promptly implement measures to cope with U.S. tariff policies, aiming to maintain economic growth of 8.3 to 8.5% this year and create a solid foundation for subsequent years. Enterprises and the Ministry of Industry and Commerce are adjusting strategies, leveraging FTAs, and expanding markets to sustain growth. For example, 46% of one enterprise's fruit output has been exported to the U.S., with growth of about 20% since the beginning of the year. In response to new tariffs, businesses have separated production and logistics costs to keep prices reasonable and competitive, negotiating with importers to share profit cuts to cushion market shocks. It is expected that bilateral negotiations on specific items will be held. Since Vietnam currently runs a fruit trade deficit with the U.S., it may gain advantages to reduce tariffs further. Not only agriculture, but also textiles, footwear, furniture, and seafood sectors have prepared response strategies, focusing on market diversification and FTA advantages to reduce dependency and seize new opportunities. On the policy front, the Ministry of Industry and Commerce affirms that trade negotiations with the U.S. are ongoing, while also supporting enterprises in market expansion and development of zero-tariff products to enhance competitiveness. U.S. retail giant Walmart has also confirmed it will continue sourcing products from Vietnam, viewing the country as a strategic market. In early September, the Ministry of Industry and Commerce will invite over 300 major international buyers to Vietnam. With more than 3,000 scheduled B2B meetings, this is an opportunity for businesses to consolidate traditional markets, expand into new ones, and demonstrate resilience amid trade volatility. Meanwhile, Dang Nai Province has just started construction on the expansion of the Trian hydroelectric plant, a national key energy project invested by EVN, with a total capital of nearly 4,000 billion Vietnam dong. The project, executed by a consortium of 6 contractors, is expected to be completed by the end of 2027. Once operational, it will enhance electricity supply for southern Vietnam. So far, about 73% of the required land clearance and compensation has been completed. According to consolidated reports from 34 provinces, by August 18th, all 34 out of 34 provinces nationwide had completed the goal of eliminating temporary and dilapidated housing. A total of 334,234 houses were newly built or renovated, finishing 5 years ahead of schedule. This national movement, marking the 80th anniversary of National Day, mobilized over 454,000 workers and 24,760 billion Vietnam dong in support for policy beneficiaries and households facing housing difficulties. The State Reserves Department is focusing resources to complete the task of purchasing an additional 280,000 tons of grain for the national reserves this year, under the Prime Minister's Directive No. 129. This includes 200,000 tons of rice and 80,000 tons of paddy to support people in need, stabilize domestic food prices, and balance supply and demand while ensuring food security and social welfare amid natural disasters. The deadline for rice procurement is October 31st and for paddy October 15th. Dear viewers, how can garden products go beyond small-scale trade to truly become market-preferred commodities? This is the concern of many gardeners, especially in urban areas. In Ho Chi Minh City, some Mai flower gardens have successfully elevated their products into high-value commodities, both strengthening their brand and paving the way for sustainable development. For instance, Nguyen Van Huong, a gardener, turned regular Mai trees into bonsai valued at nearly 1 billion Vietnam dong by grafting premium varieties and shaping branches into artistic forms. Currently, 80% of his bonsai stock has already been pre-ordered for the upcoming Lunar New Year. Bonsai Mai has shifted from rural ground planting models to urban potted bonsai cultivation, raising values up to 5 to 10 times compared to traditional trees. The city's ornamental Mai industry has now been recognized under the OCOP program, granting farmers access to loans, technical training, and trade promotion opportunities. This not only elevates local agricultural products, but also contributes to economic restructuring in the city. Ahead of National Day holidays, Hanoi has become the focal point with a series of large-scale events. Airfares, especially on the Ho Chi Minh City-Hanoi route, have surged to levels comparable to Tet. Round-trip tickets from August 30th to September 2nd range from 4 to 7 million Vietnam dong, 2 to 3 times higher than normal. Airlines have increased capacity by up to 20% to meet demand. Hanoi's Department of Tourism is coordinating with travel agencies and hotels to ensure smooth services while advising tourists to book early. Beyond parades and exhibitions, the city will host cultural street programs, expanded walking zones, and food festivals to enhance attractions. The semiconductor industry is currently undergoing major disruptions, from tariffs and export restrictions to unprecedented White House agreements. Companies are being forced to adapt step by step. In recent days, top tech U.S. CEOs have visited the White House not only for meetings but also announcing major investments. On August 6th, Apple CEO Tim Cook pledged an additional $100 billion in U.S. production, raising total investments to $600 billion over the next 4 years. President Trump praised the move and assured that Apple and other firms producing domestically would be exempt from chip import tariffs. Similarly, NVIDIA CEO Jensen Huang reached an unprecedented deal allowing exports of H20 chips to China in exchange for sharing 15% of Chinese revenues with the U.S. government. Intel CEO Pat Gelsinger also eased tensions with Trump after the administration withdrew its resignation demand and considered buying a 10% stake in Intel. Experts compared these CEO visits to shock absorbers, cushioning the semiconductor industry from U.S. policy upheavals. Since early this year, the Trump administration has threatened to revoke subsidies, blocked billion-dollar chip orders to China, and even considered tariffs of up to 300%. The New York Times described this as the strongest U.S. government intervention in the economy since the 2008 financial crisis. The aim is clear: force companies to strengthen